Welcome to TradingStocksLive.com. We're looking at a chart up for International Business Machine, otherwise known as IBM. If you look very, very close at this daily candlestick chart pattern, look very close, you will see something. You will notice that this stock chart, which is a candlestick chart, the stock price goes up, down, up, down, up, down. It just kind of goes up, down, it just goes up. Now this particular pattern is called a channel, and if you would take, let's say, this top line, connect it with this line, go a little bit higher. In fact, we'll take this high. Okay, we'll take this high. We just kind of stretch. We kind of just stretch it out over here. Okay. Now you notice that there's something interesting that happens right here. This high is plotted and connects this high. The line goes out again, and the stock it drops right below this, the same previous high, and the same deal here until the stock finally just breaks out. Now you guys already know this is a resistance line. Now we look at a support line. Okay, we take this level right here, take this low, go a little bit lower. We connect it with the next low. We connect this low with the next low, and we have what's called a support line. Now together, this is called a channel. Now on a channel, this is called a sideways channel. On a sideways channel, once you have a low here and you have the next low, which is the same identical price or price similar to the previous low, that's your buy point. Especially if you have a stochastic reading, which is at the 20 or below the 20, which tells you that the stock is oversold. So here we got sellers come in after the stock runs up, hit resistance, it comes down right to the previous low. Remember, this is the first low here, and in fact this also is a low, and this is also a support area, and where the stock came down and just stopped and sat right on the 200-day moving average. That's exponential moving average. And don't forget, these are daily bars that we're looking at. So we can extend this support line here, measuring the stock from when it came down and sat directly on the 200-day moving average. So this really is the second time. This is the third time. So now we have a fourth time here. These are buy points. This is a fifth time here. Now this fifth time, it really is a good buy point because, again, you had the stochastics, which tells us that this stock is trading in oversold territory. Now, oftentimes stocks will trade in what are known as channels. Let's look at another stock. Let's take a look at X, U.S. Steel. Are you able to identify? If you look closely, you can identify the channel in U.S. Steel also. We see lows that are coming in right around this area. Okay, now we want to do some research and kind of stretch back, and we'll see that this also, right around this area, this also is an area of recent support, because the stock pulled down and didn't quite yet hit this line, but it came close enough towards it. Actually, we can take this line and bring it down a little bit. Okay, and that'll bring us like around this level down here. Okay, so now we have lows there, and we just stretch this line all the way out. And as you can see, we really don't need a resistance line, because this stock, U.S. Steel, is bouncing like right off the 200-day moving average almost. But it's actually going a little bit higher than 200-day moving average, right around this area. So this resistance line is not necessarily textbook resistance line, but what it does is it gives us an area in which area of interest in which we can sell. When we see the stock hit a resistance line here, high, which is right here, and we see a doji, which is a candlestick reversal pattern. Anytime you see an uptrend, you see a doji, a lot of times you want to be careful, especially around the 200-day moving period average. Okay, so this is one time. So the second time you've seen the stock come up again right around the same area. These are good sell points. Now the third time the stock made an attempt at recent highs it was able to break out of this area, but it wasn't not for too long, for only 1 or 2 days, and it went right back down to the previous support area from here, which it did drop below the immediate previous support area. So the stock channel, so what we see is a channel. We see a channel here. We see the stock just moving inside of this channel. Sometimes it would touch the bottom of this channel. But anytime you see a stock touch the bottom of the channel, what is again with the stochastics showing you that the stock is oversold, these are areas that you want to interest yourself in terms of, you want to really look at these areas in terms of buy points. And you really, if you are a short-term trader, you want to hold the stock for just this 1, 2, 3, 4, 5, 6, 7, 8, and on the 9th day, you see this reversal candle coming, which is a dark cloud cover. That's a good point to sell. You guys know that we watch dark cloud covers because these are very strong points in which we really want to sell. Now, instead of holding the stock, sell it there. Come back down and think about buying it here, and again here, and again right now. US Steel, we see right now is sitting directly on the support line from the previous few lows. Now this stock has tagged this line 1, 2, 3, 4 immediate times prior to now. What does that tell us? That, well, the stochastics are not necessarily below the 20, but however they are down there. So this is a stock that you definitely want to take a look at if you want to make money trading channels. Okay, now the third stock I want you guys to take a look at is DuPont. Now DuPont, this is symbol DD. DuPont has just a very small channel. This is a channel that trades for a short period of time, but it's still a channel. We see that DuPont hit resistance DuPont hit support 3 times. This is 1 time, 2 times, twice, and that's the 3rd time. The 3rd time being on the stochastics level that is oversold. Now, what I want to really point out to you guys is this line. This is the 200-day moving average. You want to pay really close attention to when the stock pulls down and sits on the 200-day moving average, but when that is also a resistance line. Now we see, the support line. Now we see this is the first support. DuPont ran up and came back down to the exact same level, which is also the level right around the 200-day moving average. So a few weeks later, the same thing happened. So when you've seen this stock pull down, have you been watching it? Had you seen this DuPont symbol DD come down right to right around this area, which is previous support, as you can see right here, and right below the 200-day moving average with a stochastics indicator, which tells us that it is overbought, that's a good time to sell. Now, as you can see, DuPont ran right up. Now what happened was, we see another trend line here. Now what happened, DuPont, when it did go up towards the resistance of the previous high, DuPont pulled down, and as opposed to stopping at the resistance, well, let's see what happens. This is the previous high. Okay, let's take this line and stretch it all the way over. DuPont had so much momentum that it just broke right out of this channel. Okay, but we're going to talk about breakouts in a second. But right now we want to focus on channels and how you can benefit from stocks that trade in the channel. Now, we told you want to get in this stock right along the support levels, especially if you see a support level that's sitting right on the 200-day moving average with a stochastic reading that is oversold right there. Well, that is either on the 20 or right around the 20. Now you see previous resistance here. These are sell points, pre-resistance there. Now we would have, based upon this, we would have sold here and we would have missed this. But however, we also would have sold here and missed this. So you guys got to remember that a lot of times when just trading channels, we're not talking about breakouts right now, we're talking about channels. Now a lot of times, well, let me back up. A lot of times you don't want to sell until you see a red candle or a reversal candle come in. So in this particular situation, some of you may not have sold just because the stock was approaching resistance, especially because of the green bars coming in. But many of you would have sold. But that's not the point. The point here is that whenever you see a stock trading in a channel, You want to make sure that you get in right around the support of the channel, especially if the channel is on the 200-day moving average, and you really want to get out, or you really want to start lessening that position as the stock reaches the resistance line. This is www.tradingstockslive.com, showing you guys how to make money using channels.